G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. In this video, I wanted to go over the housing market and also looking at residential and commercial, looking at some data, looking at numbers like we are now, and looking at some troubling signs for the market in the housing sector, looking at lumber and also looking at construction and seeing how we are going with new builds. So the first, I want to talk about the numbers just came out for the new building permits and housing starts. So we had, the numbers were previously almost 1.4 million new building permits, and the estimate was 1.39. We came in higher than expected at 1.446 million. So it just goes over number of permits for new construction projects. It implies the movement of corporate investments, US economic development. It tends to cause some volatility to the US dollar. And if it's more permits, it's bullish for the USD, and if it's less, it's bearish for the USD. So we had a beat there. Housing starts. It's the indicator that tracks how many new single-family homes or buildings were constructed. For the new survey, each house and each single apartment are counted as one housing start. The figures include all private and publicly owned units. It indicates the movements of the US housing market. So we had a beat there. It was previously 1.314. 1.31 was the estimates, and we beat. We got 1.353 from last month. This was calculating June's data, which is quite interesting that we saw a beat there. And yeah, it seems whether it was revised lower, like the jobs numbers were, but it's consecutive months on end, we don't know. But revisions can really give you a sign that if they do revise the numbers lower than what, and if you beat the number, it's extremely lowly revised, then you can see the estimates are quite, they want to look bullish more than expected, to see the housing market isn't cracking when it could be. And you look at the charts to really see the trend of where new building permits and housing starts are going, to give you a better understanding, instead of just looking at, bet estimations, it must be doing all right. But that's not true. You have to look at a longer sort of time frame to get a better understanding of the trend of where we're going with the housing market in terms of these data points. Now, bar charts. Investors are the most underweight real estate since January 2009. This chart says it there. It's not very clear, but you can see, the portfolios decline going into December 2008. We had the housing crash, and that lasted a long, long time. But you had investors starting to pile back in as we started to recover, and then we stayed sort of flat and neutral throughout, steady. A big peak up, just after the pandemic, had a lot of people buying houses, crazy, and then started, from late 2022 to now, seeing a decline in investment. So very, very interesting. So as I said, we can't buy homes, office buildings are empty, and shopping centres are closing down. Weird times. TripleNet Investor. This is absolutely horrible. Hollywood's LA's largest shopping entertainment complex faces foreclosure. Ovation Hollywood was purchased in 2019 for $320 million, $691 per square foot, with the owner spending millions on major redevelopments last year. The 462,000 square foot centre was sent to special servicing. A $200 million plus loan tied to the property was transferred due to imminent default. Some of the most prime real estate assets are now facing major financial distress, but the troubles look to be getting just started for some. For the latest updates, follow Triple Net Investor, and that's the place there. Pretty fancy looking joint. And yeah, that's crazy, eh? Foreclosure. So all these places, these shops will be losing out on this, prime location. So it's starting to hit, shopping centres, and I've mentioned this guy's starting to post a lot of the commercial side of the real estate market, how a lot of foreclosures are starting to happen. The properties are getting devalued, and it's negative equity. These owners are starting to really feel it, take a big hit, and when the rates go up, servicing that loan is quite hard. So that's what's happened. So yeah, very, very bad. Another tweet, another buildings. The owner of San Francisco's largest apartment community has defaulted on a $1.8 billion in loans tied to the complex. The 152-acre, 3,200 unit apartment community known as Park Merced was just appraised for $1.4 billion, plummeting $700 million for 2019 and $400 million less than the total loan balance. This is incredibly concerning given the cracks have begun to appear in sizable apartment/multi-family buildings across the largest cities in the US. The source, Real Deal, and that's the place there. All these buildings, pretty nice. Look at that little river in the background. It's crazy. And then the ocean, so the inlet that goes in the ocean. And yep, another one, another default. So pretty shocking, as we see it just keeps escalating across the commercial real estate sector, and then soon it'll be the residential market, but not quite yet. It's a bit different in the residential market when the financing for those are a bit more durable. You get 30-year mortgages in America, so they can sort of, they can lock in that lower rate, but it's a bit riskier when it comes to commercial real estate, and you're seeing that the cracks are starting to emerge right before our eyes. Bar charts. Lumber has fallen to its lowest price since January 2023. It's now down 25% over the past 4 months. You zoom in there. There it is there, dotted line. We're steadily declining. That's crazy. It's down 25% in 4 months, guys. That's a rapid decline. And what does this mean? I'll show you the next tab. And Business Insider explains it pretty clearly. Lumber prices have plunged 24% as the year's home builders season fails to meet expectations. So, down from their mid-March peak, subdued housing building activity. Using US housing starts and new building permits are on the decline this year, falling 4% and 6% just in May. The combination of oversupply and falling demand for lumber are driving prices down, says industry experts. Lumber prices have plunged this year as the peak home building season falls flat amid subdued demand. The essential home building commodity has seen futures prices plunge 24% from mid-March to $473 per 1,000 board feet. The sharp decline is about face from the start of the year when lumber brokers were excited about 2024 prospects for the commodity due to the US housing market that is sorely in the need for new homes. We entered 2024 with optimism for the year to come with the housing deficit that needs to be filled. Commodity lumber and structural panel prices reset to pre-COVID range, and a Fed that stopped raising interest rates with hopes of many cuts to come. Here, the Fed. So they're expecting cuts to come this year, which has not happened. So the optimism isn't quite there since the start of the year, that's for sure. Sherwood Lumber Senior Vice President told Business Insider. Okay, so that optimism drove a builder up in lumber inventory at the start of the year, and the inventory is still getting worked through the home building season. Appeared not to be as strong as expected, according to Goodman. So they ramped up supply, anticipating reduced rates and increased demand, and that has not happened. US housing starts and new building permits have steadily fallen this year. Okay, so we just mentioned the data before, and from this year, it's been going down, right? Despite the beating of expectations, the latest numbers in June, we are seeing declining 4% and 6% in May, respectively. Home builders have been slowing down new construction projects because of new sales, new homes have also been steadily declining this year as consumers grapple with lingering affordability issues driven by high mortgage rates and stubbornly high home prices. Putting added pressure on lumber prices is that the commodity is experiencing a period of oversupply. What many did not recognise is that new demand has been declining faster than the sawmill production. Commodity forest markets continue to be oversupplied. Sherwood Lumber CEO Kyle Little told Business Insider. And falling demand combined with rising supply can be a powerful dynamic that puts downward pressure on prices. Last week's housing report provided confirmation for many that demand is somewhat worse than most realised. Current supply needs to be consumed, and the market is indicating that it will, at a lower price. So yeah, very interesting. We get some people in the industry talking about it. And yeah, it's a sign that the activity in the housing market is slowing down, because lumber's a key, obviously material to build houses, and then you'll have other materials start to follow as lumber leads the decline. And we just have a chart from Fred to finish off, talking about new privately owned housing unit starts, total units. And we'll zoom in. As you can see, from 1959, 1960, we had a decline, rapid decline there. And we had a recession, we had a rise, we had a decline, we had no recession. All right, so we had nothing there. We had a sharp decline, so we didn't have a recession in this period, which is quite odd. And then we had a rise, then we had a decline, we had a recession, we had a big rise in the early 70s, and then we had a huge drop off. We had a recession, had a huge rise, and big decline. We had a recession, and then had another recession back to back. It's declined again. We had a big rise up. And what happens? We went right down and slowly trickled down as we faced a recession in 1990. Here was a bit different. We had a big uptrend. We had a recession. That was a tech bubble, a tech boom and bust. There was nothing to do with the housing market. And we continued this uptrend for quite a long time, from 1991 to 2006, and then we had a decline for a long period of time, and we had a recession. We had a black swan event here. Skip that one. And now we had this big upwards rise since 2009 to 2022. Now we're seeing the decline. Is this the start of another recession? According to Fred data, we have to wait and see on that one. All right, guys, I hope you enjoyed that one. It's going over the housing market, looking at real estate in the residential and commercial sectors, looking at lumber prices and new housing starts and permits. So if you like this video, please smash the like, comment your thoughts below, subscribe to stay updated, and I'll catch you in the next one. Cheers.